Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FXPesa. So today is a beautiful day. We have had quite volatility after the FOMC press conference yesterday. So the Fed basically decided to hold interest rates steady, just as we expected. So current level is a range between 5.25% and 5.50%. So what was most surprising in the Fed announcement yesterday is the uplifting of the medium-term outlook for the interest rates in the US from 4.6% to 5.1%, meaning that the Fed is looking to continue holding interest rates higher for a longer period of time. So for any investors who are betting on a potential rate cut by the Fed in next year, then those hopes are basically gone. And there is this overall expectation that the Fed will continue holding interest rates higher in order to curb the rising inflation, which was reported at 3.7% in the last reading in August. So today, we'll be looking at a couple of more developments happening in the markets, ranging from the decision by the Swiss National Bank to hold interest rates steady at 1.75%. And of course, the most anticipated news of the day will be the Bank of England. So hello, Philip. Hello, J Squad. Martin, Richie, Joseph, and Lemuel. Good haircut. Thank you. Thank you. I appreciate that. So let's get things started. I'm already seeing a comment here. A distress call. I'm experiencing a problem of not capturing markets when there's a breakout. I map them out well. However, I seem to be late in jumping in. What do I do? That's a really good question. We'll also be focusing on that as we progress. So let's begin where we always begin. And this is the economic calendar, and see what has progressed since yesterday. So yesterday, there was a very good presentation in the market snapshot by Norbert. He literally covered everything there is about the FOMC press conference and the expectation from the announcement. So the federal funds rate was held at this range, with the upper band being 5.50%. But the most surprising thing in the market was the FOMC economic projections as well as the press conference. So the Fed was more hawkish than normal, meaning that it's looking to continue holding interest rates higher for a longer period of time. And that basically boosted the dollar. So the dollar did really well yesterday after the announcement. And even today, I expect the dollar to continue gaining against other weaker currencies. So GDP in New Zealand came in stronger than expected at 0.9% versus an expectation of 0.4% in the last quarter. And of course, the previous reading was 0.0%. Then fast forward this morning at 10:30 a.m., we heard the SNB monetary policy decision, or in short, this is the Swiss National Bank. So there was overall expectation that the SNB would go for a 25 basis point rate hike, but instead it chose to hold interest rates steady at 1.75%, and this was very surprising. So this explains why we are seeing a very strong USD against the Swiss franc. So as you can see from this chart, there was this consolidation that lasted about 6 days before the market made a break towards the upper side. And this has continued to add more pressure to the upside, basically the dollar gaining more and more against the Swiss franc. So yesterday in the evening, after the announcement of the FOMC, there was a dollar gain against the Swiss franc. And then today early in the morning, that is within the last 1 hour, there was a huge jump in the dollar against the Swiss franc. So the fact that the SNB is choosing to hold interest rates steady at 1.75%, and the Fed chose to hold interest rates steady at 5.50%, then it means that there's a huge interest rate differential, which basically means there's a carry trade between the two economies. So you'll find that investors and funds will be flowing out of Switzerland and into the US. So if, let's say, you are a bond investor, you'll not be very much interested in the Swiss National Bank bonds compared to the Fed bonds. So you find that a lot of investors will be moving towards the American bonds and dumping the CHF. And this basically means a stronger dollar against the Swiss franc. So that outflow is what is leading to the current trend, where generally the dollar keeps on gaining against the Swiss franc versus this big sell-off that had happened sometime back in June. So now we have broken a new resistance. This was a resistance level around this area here. And now as the market rallies higher, there occurs a natural resistance level at around 0.91450. So while the current price action may not indicate a good entry point, so it's not a good idea to buy right after there's a big spike in price. So sometimes you want to wait for the right kind of setup. So in this case, I would say it's best to be patient, wait for the market to form either a continuation pattern or a consolidation of some sort before going for another position. So if you missed out on this breakout, don't worry, just be patient and then wait for the right moment to go for another buy opportunity, targeting that the price will continue accelerating and eventually get to the 0.91450 price level. So that's it for the USD CHF. And now we look at the economic calendar and see what we're expecting later in the day. So as we head forward, we'll be expecting an SNB press conference, where basically the central bank governor of the Swiss National Bank will be presenting a speech and of course responding to questions from journalists concerning the policy decision that they made at 10:30 a.m. So that should be happening just about now. So right after this session, you can literally search for the SNB live and then see what the governor has to say. So the German Buba president, Nagel, will also be issuing a speech, already started at 11 a.m. So it's currently ongoing. And then the most important news for the day will be the interest rate decision by the MPC members of the UK. So MPC is short for the Monetary Policy Committee. And this is a committee that sits and decides on the direction of interest rates in the UK. So we are expecting that the Bank of England will hike interest rates by 25 basis points from the previous rate of 5.25% to 5.50%. So one key thing to notice is that the UK is a very strong economy. Currently, it's having a much higher inflation compared to other economies. So there are projections that the Bank of England could push these interest rates towards the 6% level. So there's more upside potential for these interest rates. But also, you have to be aware of the issue of inflation in the UK. So from the last reading in the UK, I think it was somewhere around here. Hope it's close enough for us to track it. I'm looking for the UK inflation reading. Somehow I can't locate it. So just a moment. Okay, maybe it was the previous week. So somehow I can't find it, so I might have to search it. So yes, we have the data right here. So from the most recent report, we can see that there was a high peak for UK inflation rates, which was at 11.1% in October last year. So since then, we have had a gradual slowdown in inflation as oil prices continued weakening. So this generally went down, and in the last reading, it was 6.7%, which was a big surprise compared to other economies that are currently experiencing much higher inflation. So there was a big spike in inflation in Canada as well as the US, And that's why we are seeing their central banks being quite hawkish. So for the UK, inflation has continued behaving as expected, and now it's currently at 6.7%. But then 6.7% is still significantly high, and the central bank target is 2%. So there is about 4.7% that the UK has to track down and move it back to the 2% target. And this is becoming quite a challenge for the Bank of England. So knowing this, and now looking at the economic calendar, looking at the potential for the Bank of England hiking interest rates, it remains significantly high. There's a very high expectation that the Bank of England will go for an interest rate hike. So an interest rate hike would move rates to 5.5%, which is the same level as the US, which is 5.5%, which basically eliminates the carry trade. So the carry trade is the trade that basically takes advantage of the differential in interest rates. So in this case, it means that investors would also prefer to remain invested in the UK bonds because they're expecting even higher interest rates. So as a result of this, we should be seeing a much stronger pound against other currencies. So as long as the Bank of England remains hawkish, then we should be seeing some further upside in the UK pound against other currencies. So looking at the pound USD currency pair, you'll notice the big spike that happened yesterday. And this just got us to the place we were looking for or waiting for, which is basically the bounce of the lower trend line. So we have been in this bearish momentum. If you count the number of weeks, this is 1, 2, 3, 4, 5, 6, 7, 8, 9. And this is the 10th week that the pound is losing to the dollar. So the dollar index has been on a 9-week rally against other currencies. And now for the UK pound, you can see this is the 10th week, and there's a good chance we'll be seeing a bounce from this area, especially if the Bank of England remains hawkish. So there's a coincidence of these conference levels. The first one is this support area here that appeared on this lower trend line when the market was moving higher. So this is the period when the pound was gaining against the dollar since September last year. So it kept going up and up and up. And then we had this breakout happening here, where for a period of a couple of months, we've been seeing the pound sliding against the dollar. But now, after the dollar or the Fed has paused interest rates for 2 consecutive times, whereas the Bank of England has been hiking interest rates, then the overall expectation is that the pound now begins to recover against the dollar. So we expect quite a huge swing to be happening from this area here, getting back towards the upper trend line. Perhaps 1.253 might be a nice target. So from the 1-hour chart, this is how it looks like. The market that broke towards the upper side kept trading downwards, got to the lower trend line. In the last 1 hour, you can see the strong rejection. And now as we approach the Bank of England decision, there's a good chance we'll be seeing a bounce here. So strength in the pound against the dollar might be something to look out for. But then the dollar is not per se the weakest currency in the market. So it might not make as much sense to go for, let's say, pound USD trades. You might want to trade the pound against other currencies. So an example, pound against the Swiss franc. The Swiss franc or the SNB just decided to hold interest rates steady. So in this case, you can already see there was a nice trend line here on the lower side. Market was unable to break this trend line. There was quite a retest here. You can already see the market retesting the trend line and immediately jumping higher and getting towards the upper band. So now, as we approach the decision of the Bank of England, then there's this potential that this particular trend line will be broken, and it's already happening. So market has already broken this upper trend line, and the room for upside remains significantly higher. So another interest rate hike by the Bank of England would mean breaking out of this formation strongly and getting to the top of this pattern. So the top of this pattern is already up here. So you can already easily identify a nice target area, which is 1.12373. So there is this potential that this market could potentially rally and get to this area. And that's based on whether the Bank of England is hawkish enough. And of course, the Bank of England deciding to hike interest rates by another 25 basis points. So the beauty about the announcement by the Bank of England is that we don't normally have a press conference thereafter. So for the US, when they make an interest rate decision, we have the FOMC press conference. For the Eurozone, we have the ECB press conference, and for Switzerland, we have the SNB press conference. But for the UK, we normally have a break, so the market will get the news, and then on the following day, this is when we get a speech from their central bank governor. So looking at the economic calendar here, this is the monetary policy summary. The MPC official bank votes, this is still at 2 p.m. and the official bank rate. Then tomorrow, at some point, we'll be expecting to see a speech from the Bank of England governor. It should be somewhere, but of course, the focus is majorly on the interest rate decision by the Bank of Japan, followed by a press conference. So it seems like we will not be getting a statement from the Bank of England governor. So basically means that we ride the data that we get today. So that being said, later on in the day, we'll be getting the weekly unemployment claims from the US, and these will be happening at 3:30 p.m. We'll get the Philly Fed Manufacturing Index, and of course, the ECB President Lagarde will be issuing a speech at 5 p.m. before we look at existing home sales for the US, and these will be happening at 5 p.m. So looking at the charts, I think there's a good likelihood that we'll be getting some good opportunities here, not just in pound CHF. We might also want to look at the pound yen currency pair, which tends to be a little bit more volatile than usual. So it's also trading at a very interesting point where we have a major support level. So the potential for the market breaking or bouncing from this area is extremely high, and this would present a very nice trading opportunity. So it's one key market that has been consolidating for a while. It's currently trading within a falling wedge. So if you're a pound yen trader, then this is the kind of consolidation you might want to be looking for, because it often represents a very nice breakout. So in this case, from the forward chart, this is how it looks like. And if I extend my trend line here, you can already see that the market has been narrowing down. The volatility has been weakening and softening. And now we are at the tipping point where we get a fundamental story that will drive the market in one direction. And there is a high likelihood that this direction will be to the upper side. So if the market manages to bounce from here, a breakout would suffice, and it would present a nice trading opportunity. So besides that, that's the asset to be on the lookout for, pound yen as well as the pound Swiss franc. Gold managed to make a very good rally after bottoming around 1900. So this rally went all the way to around 1947. You can see our target area was not hit yet, which was 1948. So there was like $1 before we'd get to our target. And then the Fed announcement yesterday happened to strengthen the dollar, and gold managed to reverse all the way back down. However, I remain strongly bullish on gold prices. So from the most recent swing, you can see that the price of gold was forming lower highs. And then from this low to the next low here, you can see that the market is forming higher lows, which might imply that the market is forming some form of triangle. So just by analyzing the swings that we currently have from this low to this high, and then this low to this high, then this low to this high, the swings are getting smaller and smaller. And in this case, as the market pulls back downwards, there might be an opportunity to potentially enter a bullish position. So this V-shaped, I would say inverted V or N-shaped reversal here might not hold for long, because currently in the market, there is quite a high demand for gold, and gold could be looking for some support before it changes direction. So in my experience, the best way to approach these is now to start monitoring the current cycles. So from the 15 minutes chart, I would say that we have several points that we will be analyzing. So one is the high of the day. We want to see the low of the day here playing out so far. We also want to see this swing. This was the highest price gained during the Asian session. And now as we enter into the New York session, then we should be looking at some form of consolidation happening in gold prices. So we already have a trend line shaping up here on the 15 minutes chart, and potentially we could be having another one, let's say from this point, maybe to this point, and so on. So just monitor the consolidation, see how gold trades sideways, and then look for that potential breakout. So for AUD USD, a very big sell-off happening here after yesterday, and of course the news this morning. There's quite a strong deceleration, which is similar to what is happening in gold, but the market seems to be finding some form of support. This area was acting as the resistance, as support here, and now it seems to be playing out as the support for the Aussie USD. So there is a good chance we'll be seeing some form of consolidation around this area before we determine whether the dollar index will continue moving higher. So after the big spike in the dollar index here, and then the pullback, this pullback may explain why we are seeing these pauses happening. So there's this pause happening around this area here for Aussie USD. There's this pause happening around this area for gold. And I'm sure it's the similar thing against other currencies. So Euro USD managed to drop back to support. This was the previous support, grabbed some liquidity here, and it's now seemingly making a reversal. So Pound USD, a similar thing, big sell-off, holds this support and now potentially moves higher. So for USD CAD, you can already see that the dollar gained against the Canadian dollar, and now we are approaching a level that might be termed as the resistance. So I'll try and reshape my trend line here. And clearly, you can see that this area was acting as support, and now the market is taking a pause around this area. And we could be seeing the dollar continue to gain against the Canadian dollar for the day, especially considering the correlation between the Canadian dollar and what's happening with oil. So oil has been bullish for quite a period of time, but then for the last couple of sessions, we have had the oil prices weakening. So looking at this, you'll notice the price opened here on Tuesday, went up and closed lower. Then on Wednesday, kept going down, made some recovery, and then closed lower. And we are on course for the third straight day where oil prices are weakening. So with this in mind, when oil is weakening, then the Canadian dollar also tends to weaken too. And then considering the news that we heard yesterday, strengthening the dollar, forming this low, which is higher than the previous one, then this breakout was due, and now there's that potential that the market could continue moving higher for USD CAD. So for US equity indices, I think it's a pretty straightforward momentum. So after basically moving up for quite a period of time, we had this breakout happening for this particular trend line. The market went up and then kept going up, and then we got this conference level from this high to this high, and then this high, basically forming this trend line. And then last week, the market approached the same trend line, found resistance, and pushed further back downwards. So after pushing further back downwards, we had some couple of days where I would say the market was just moving sideways around here. And then the big breakout yesterday in the evening, and today the market is taking a pause around 14,925. And this is for the US Tech 100 or the NASDAQ. So from the forward chart, this is how it looks like. So there's more room for downside momentum. So we could be seeing the NASDAQ continue to move further back downwards, especially considering that the Fed has promised to hold interest rates higher for longer. So this could affect the stock market negatively. So some further drop towards 14,700 might suffice as we approach the end of the week. So for the US 500, that is the S&P 500, big sell-off, same theme of this trend line here, working quite efficiently. So there's still more room for downside potential. And this basically implies there's a good likelihood that the market could drop to around this area of around, let's get the price level. Just a moment. Around 4,355. So for the Dow, it's also a similar story. It's not the exact same chart, but you get the idea of what is shaping up here. So if I remove all this noise and accumulated analysis, then I have a clean chart here. And if I draw my trend line, you can see the overall theme here has been the market forming a resistance that is somewhere closer to this point, excluding this area here. So every time the market has gotten to this particular trend line, has found resistance and prices have continued moving down lower. So while other US equity indices are currently having some more room for downside potential, we also observe that this has been quite a support for the last 3 weeks. So in this case, we could be seeing the market finding difficulty breaking below that area. So a major support level is the same price bottom that we saw 2 days ago. So while the market found support here, might be a little bit difficult to break below this area. But if the breakout happens, then we trade the acceleration further downwards. So European equity indices, they were bearish yesterday in the evening, but we are already seeing signs of support. So after the market got to this area, you can see the strong pin bar happening at this point for the French 40 index. And of course, this remains a major support level, a rejection of lower prices, and now potentially another swing towards the upper side. And one key area to think of as a target is this high that we saw on Monday. And then, of course, these are the high. So yesterday's high, the Tuesday high and the Wednesday high seems like very nice targets, especially after the formation of this pin bar, which indicates some good potential entry. So this is evidence that a lot of buyers have entered this market, rejected lower prices. So we could be seeing some acceleration towards 73.06. So for the Euro 50 index, also you can see the same theme, a big sell-off yesterday, and now the markets are recovering. So I expect some further upside potential. And for the UK 100, remember, this one will be having news at 2 p.m. when the Bank of England announces interest rates. So my advice would be to stay off until we get the actual announcement from the MPC committee in the UK. So for USD and H, you can see the dollar is now attempting to make a recovery against the Chinese yuan. So yesterday in the evening, there was a big rally. Now we are seeing some form of pullback. But overall, we can see that this remains a key price level for the USD and H. So from what I'm seeing is a big sell-off, back to the neckline, another big sell-off, back to the neckline, another big sell-off, back to the neckline, which basically indicates an inverted head and shoulder pattern. And now potentially, the idea is to look for the breakout of this price level, which is 7.31511. So if the market breaks above this area, then there's that potential that the market would move higher. So BTC USD, basically consolidating. We don't have much happening here. And this is the price action traders territory. And the best thing about these consolidations is that when the breakout eventually comes, it represents some very nice entry points. So for this one, you just watch out and wait for that eventual break so that you can identify a good ride. So I'm seeing a lot of activity in the comment section. Focus on Tesla today. I think I already did some analysis on that. It's currently on a bullish channel and it's doing very well in terms of price action. So a very nice setup on Tesla. Thank you for mentioning it. So this is what we have. This is the forward chart. So we'll try to move to the 1 hour chart. Notice there's big gaps because the stock market has what we call pre-market trading. So we are seeing this potential break, especially after the news yesterday, but then this channel seems to be holding on quite well. So this Tesla, over the last couple of days, a very strong upwards momentum. So I would say from this particular day, which is the 18th of August, to a couple of days ago, Tesla was up about 32.39%. And this is quite an acceleration, especially knowing that the S&P 500, when it does best, it's usually around 30%. But then we are seeing one stock making a big momentum of about 32% within a couple of days. And now yesterday, after the news, which basically weekend equities, there was this big sell-off here. So we could be seeing the Tesla stock making a recovery or a big sell-off, especially after breaking beyond this point. So depending on how the market opens, if we see the market opening strongly, then we could continue riding this channel. But then if it opens weak, let's say with a gap downwards, then we trade in that particular direction. So there's a question to check on Euro AUD. We'll check on that. I think we have already done USD CAD. We expect some further upside momentum. Another good question from yesterday's bullish banter series. Are these online classes enough for one to transition into a pro, or you require a physical mentor to guide you? I don't think in the internet age you need a physical mentor. All you need is to have that hunger for information, hunger to learn, hunger to ask questions. So the more questions you ask, the more answers you get. And of course, if you don't ask, the answer is always no. So I would encourage you to practice more, even if you're not trading, just turn up on the markets every day. Just try and play out a couple of analyses, play out a couple of ideas, see how they play out, and don't fail to turn up. So for you to be a pro trader, it's more about experience. Trading, making mistakes, reviewing those mistakes, and then improving your trading game each and every day. I think we have already checked the dollar yen. So we'll look at Euro AUD. So the Australian dollar has been particularly weak since yesterday in the afternoon. So Euro AUD seems like a market that is currently trading within what looks like a channel, but not a very perfect channel. So the idea is to try to get the overall movement in this market so that we can get a glimpse of what's happening. So in this case, just by drawing the two trend lines, I can say that this is the direction the market is taking. Then, as a trend trader, you know that for a market to continue along that channel, it has to keep forming lower lows and lower highs. But then this low is significantly higher than the previous low, which basically implies that there is some form of weakness in this trend. So this basically means that there's a good likelihood that the market will continue pushing higher. But then we also know a thing or two about order blocks. So we know that there's a lot of order blocks around this area. So for anyone who was shorting, their stop loss is perhaps around this area here. And for anyone who was buying, their take profit is probably around this area here. So the room for upside is currently limited to this area, which has had a lot of price action in the past. So 1.66549 seems like an immediate target. But then once the market gets to this area, we don't know whether it will continue or whether it will go back downwards. So it's an issue where you basically observe the price action and see whether there is evidence of more buying activity or more selling activity. So on the dollar yen question, this is what we are seeing here. So a market that was facing a major resistance level here managed to make this breakout yesterday and eventually got to our target of 148.484. So remember, the more the USD yen rises higher, the more we get to see the Bank of Japan threatening to intervene in the currency market. So for now, the dollar seems pretty strong, but then it has taken a breather. So from what we are seeing here is a big acceleration and then the breather here. And this is evident from the dollar index. A big a big rally and then a breather in the last couple of hours. And this seems to be synonymous with what is happening with the USD JPY. So for now, the dollar remains bullish and USD yen remains bullish, but then this is not the right place to go for an entry. So as I mentioned at the beginning of the session, it's never a good idea to buy an asset after it has had a huge price spike. So one of the reasons that I say that is, for instance, let's say you are looking to buy USD yen, the only reasonable place to set a stop loss would be here. and this is quite a huge number of pips. So let's say you set it here, you would be risking about 735 points. But then if you waited for a proper setup without a big spike in price, then the area where you set your stop loss tends to be significantly smaller. So for now, I'll be patient, and then let's see what happens tomorrow during the BOJ press conference. Of course, we don't expect the Bank of Japan to hike interest rates, but then we could be seeing some level of hawkishness coming from the BOJ governor. I've done a video on news affecting stocks indices. No, not yet. I've not done that yet, but I will consider it in a future video series. Lastly, there was the first question that was asked at the beginning of the session. I'm experiencing a problem of not capturing markets when there's a breakout. I map them out well, however, I seem to be late in jumping in. What do I do? So the number one thing you can do is start using price alerts. So price alerts are simple tools that you use on your trading platform to alert you when the price level of an asset gets to a certain predetermined level. So for instance, let's say you are looking to buy gold when it gets to 1917. So all you have to do is to right click on your chart, go to trading, and then set an alert there. So when you set that alert, when the price eventually gets to that price level, your MT5 will ring and you'll know that price has hit one of your alerts. So the other option that you can choose is what we call community trading. So in community trading, you socialize with other traders, and then you discuss some of these key price levels. And whenever there's something breaking, let's say there's a breakout happening, then perhaps one of the members will be able to reach or understand that breakout in time and share with the rest of the group. So that's some of the ways you can approach that problem. All right, guys, today's session has been longer than expected. Apologies, but also thank you for your participation, the questions, and the activity in the comment section. So I would like to announce that we have a new episode of the Bullish Banter podcast. It's available on the FX Pesa YouTube platform. So make sure to check it out, and hopefully you'll get to learn a thing or two. There is quite some good content that we have presented there with Jesse. So thank you very much, guys, and I hope to see you on the next session.